Hi there, welcome to Grain TV. It's Thursday, May 19th, a down day in the markets. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, wheat was the leader to the downside, giving up 12.25 cents. Corn was along for the ride, losing 10.5, and beans, after being down as much as 20, managed to only close down 5. So that's a moral victory, if you will, for soybeans. Let's start this session by talking about the weekly export sales that came out this morning. We talked yesterday about how that was going to be important for beans, that we had a pretty dismal week last week. This week was certainly better. In the front month in the old crop delivery, we bested expectations, coming in at 556,000 metric tons versus 300 to 500,000 expected. New crop, however, in my opinion, was a bit light. It did come in within range of expectations, but at only 158,000. Keep in mind, new crop is where USDA is looking for U.S. soybeans to surge in the new crop delivery. So we need to start seeing those to keep an expectation of really strong exports out there. In other export numbers, corn knocked it out of the park for both old crop and new crop, exceeding expectations combined. And in wheat, it was a mixed bag, 175 of old crop, which was within line of expectations, but new crop doing better than expected. Now, why was today a down day with all these sort of positive grain export sales data? The end result today was a big risk-off day in all commodities, primarily driven by the strength in the dollar. The dollar, after bouncing to lows about 2 weeks ago, has been on a torrent pace higher. We reached the highest point since March of the end of March. And, it's all tied to expectations that the Fed is going to raise interest rates in their June meeting because of the stronger than expected economy. So that has commodities in particular pretty defensive, but we did manage to pare some of the losses. Crude oil had big losses early in the day, as much as $1.40 a barrel lower, managed to close only about 10 cents lower on the day. And beans, like I said earlier, was off as much as 20 and pared those losses to only 5 cents. So overall, the commodities seem to try and fight back, with the exception of corn and wheat. And wheat has been dogged by several things. One, very sluggish exports up until only recently. Secondly, just an expectation that the U.S. crop is going to be very large, even in spite of a big drop in planted acres, because the yield is going to be up, especially in the plain states. So we're seeing hard red winter wheat in particular really come under pressure. Now, that raises some good possibility of better export business down the road, because our export prices are becoming more competitive. But we're going to need some help from the U.S. dollar to turn lower instead of higher like it has. Let's take a look at Kansas City's hard red winter wheat futures price. This is a weekly chart, and we can go all the way back to 2009 when we were at the levels where we're at now, at that 440. The nice thing about this 440 is it does seem to have some fairly long-term support here. Now, that's not saying it's going to hold, but in the meantime, I think it provides almost a floor, if you will, at least for the short term. And if we start to see a ratchet up in business, then that may prove beneficial in the long run here and keep this 440 mark as a floor. But that's where we're at today. We closed off 12 cents in 12 cents in Chicago, 9 cents in Kansas City. And so, this is sort of going to be pivotal to see if we can continue to hold this. Keep in mind, we do have harvest starting at least in southern Texas, and we're going to move our way up through the plains. So that could potentially pressure the market as well. But that's all we've got for today on Grain TV. As always, visit us online at grainhedge.com to learn how we can help you in your own grain marketing situation. As a Grain Edge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.